However, we're in a bearish retracement. In other words, we're kind of in flux, where the market wants to actually turn bullish. And if you want to be technical about it, you can see here in the chart right here, it is signaling bullish. As far as the market condition, it's showing very bullish. Currently, this market's trading above its long-term, intermediate, and short-term moving averages. As far as volatility, as of the close on Friday, the dollar yen is closed below the upper band by 33.6%. As far as entry points, we're looking at a second pulse wave long entry point. So that's going to put us at 92.96, taking profit initially at 93.61 with a stop and reverse at 92.02. We'll also have to keep our eye looking out below at 89 even for the week ahead. It's possible we could break that if something major happens. So we'll have to keep our eyes and ears open for that. Switching our focus now to the gold spot. During the past 10 bars, there have been 6 white up candles and 4 black down candles for a net of 2 white up candles. During the past 50 bars, there have been 23 white up candles and 25 black down candles for a net of 2 black down candles. Currently, the market pulse is positive since it's trading above its signal line. The pulse scan crossed above the swing VIX 6 periods ago, giving us a signal of a positive buy swing VIX. The trend channel is up. This means that positive momentum is entered into this market, so we expect sideways to higher prices within the next 3 to 5 days. There's no overbought, oversold signal right now, and the last signal was an overbought sell 26 periods ago. Since the swing VIX crossed its moving average, the gold spot's price has decreased 0.31%, and has ranged from a high of looks like what we got here, $1,228.60 an ounce to $1,196.75 an ounce. Currently, the trend is in a bullish retracement pointing upward. The market condition is still very bullish. However, this market is trading above its long-term and intermediate average, but it's trading below the short-term moving average support, which is at right around 1205.81. As far as volatility, gold spot closed above the lower band by 41.7%. As far as entry points that we're looking out for right now, we have a second pulse wave long and a possible first pulse wave long consolidation breakout. So we're going to have to take a look at first pulse waves and second pulse waves. That would put us at initially 120, let's see, that's about $1,219.86 and $1,228.60 respectively. Those will be the 2 breakout points. We will let the profits run and put our initial stop losses at 1206.06, and we'll look for any type of reversals to the downside at the $1,100 ounce. So that would be $1,166.37 per ounce. And as far as silver is concerned, pretty much the same thing. Let me just pull up that chart real quick. Okay, this one is pretty much the same thing, but a little bit more devastating pattern. So let's jump right into it. A big black candle occurred. This is bearish as prices closed significantly lower than they opened. If the candle appears when prices are high, it may be the first sign of a top. If it occurs when prices are confronting an overhead resistance area, such as a moving average, a trend line, or a price resistance level, the long black candle adds credibility to the resistance. Similarly, if the candle appears as prices break below a support area, the long black candle confirms the failure of the support area. During the past 10 bars, there have been 4 white up candles and 6 black down candles for a net of 2 black down candles. During the past 50 bars, there have been 19 white up candles and 27 black down candles for a net of 8 black down candles. 3 black candles occurred in the last 3 days. Although these candles were not big enough to create 3 black crows, the steady downward pattern is bearish. Currently, the market pulse is negative since it's trading below its signal line. The pulse scan crossed below the swing VIX as of Friday's trading session. The trend channel is down, and we have negative momentum entering into the market, so we expect sideways to lower prices within the next 3 to 5 days. The swing VIX is not currently in a topping or bottoming pattern. However, the last signal was an overbought sell 43 periods ago. Since the swing VIX crosses moving average, silver spot's price has been unchanged and has ranged from a high of 1801 to a low of 1727. Currently, the trend is in a bullish retracement pointing upward, and the market condition is mildly bullish. The close is currently above its long-term period moving average. However, it's below the intermediate and short-term moving averages. We would need a close above 1805 and a close above 1827 to get us back on track to being very bullish. As far as volatility, silver spot closed above the lower volatility band by 14.9%. There you have it. That's all we have for now. Thanks for tuning in. Be encouraged and happy trading.